have now joining us David Roche from Quantum Strategy. David, hi, morning from India. How do you look at the entire setup? Put up by the Treasury Secretary there. I mean, the markets are discounting any of that, especially the crude, which rose initially but has fallen off. Because this market thinks it's just secondary action, which may not have much of an impact on the markets.
I put it to you like this. We have had sanctions on Iran. We have had secondary sanctions on Iran. We have sanctions on Iran shipping. We have had sanctions on Iran oil. And Iran is still fighting the war. Now we are going to have more. Will that stop Iran fighting the war? No. Why not? Two reasons. Number one is that where's China in all this? If the United States wants to hammer Iran economically, it has to confront China directly. Trump will never do that. His main aim in life is to be loved by dictators, including President Xi. So that's basically means that this thing has no teeth. What this is going to do is to make it harder for Gulf states to trade with Iran, and they do. They trade oil, they trade gold, they trade finance, and they trade dollars. So what the Besant is really doing is putting the squeeze on places like the UAE. This will not make America friends. It will probably widen the war in the Middle East, and it certainly is not going to end it. So I will tell you straight out that I think this is really not something which is going to have an influence on either the movement of oil or the resolution of the conflict about who controls the Straits of Hormuz. It's a lot of noise, as usual, but very poor in content.
David, so you're saying basically that unless US makes any kind of move against China, this entire sanctions are not going to work.
Sure, China takes 80% to 90% of Iranian oil. And they have already said, and they have said before for previous sanctions, we do not recognize the right of the United States to put sanctions for us on trading with Iran. So they're not going to change their minds. And if Trump tries to enforce these sanctions by, as was mentioned in Besant's presentation, by sinking ships and confiscating ships, they're going to be in direct maritime conflict with China. Well, there's no way they're going to win that one. And there's no way they're even going to go there. So therefore, without China, this thing is like a dog with no front teeth. It can bite you, but frankly, you won't have to go to the doctor afterwards.
Interesting. David, what therefore do you make in terms of the move that markets are making? And the US 10-year bond yield has been fairly choppy over the last maybe 3 to 4 sessions. What do you make of the moves
I
there?
think you're onto a very important thing. I actually think that for financial markets, the most important thing that's happening is the intervention of the US Treasury in the government bond markets, in long-term Treasury bond markets. This is a form of financial repression, because what the Treasury is saying is that they know better what interest rates should be than the markets do. Well, if you try to fix interest rates by government fiat, what you will get is capital flight. The US has approximately 30 to 40% of its total stock of bonds owned by foreigners, and about 30, 40% of its current account deficit funded by foreigners putting money into bonds. If the US persists in distorting capital markets, then those funds will leave and the dollar will fall and continue to fall precipitously. You are beginning to see that, because why the gold price is going up is because people don't trust US government intervention in markets, and they don't trust the US dollar in consequence. That's the story.
And how much of this story are you buying, David? in terms of the fact that they're going to use the general reserves to kind of go out and buy the long-dated government bonds. How likely is that? Just give us your take.
That is a pure smokescreen and blather. Governments do not print money, central banks do. Therefore, unless the Fed is printing money to finance the government, buying the long-term bond market, the only funds that the government has is Mickey Mouse accounting or its account with the Fed, where the government keeps its deposits, its cash surplus. That it can use, but don't get fooled by that. If you are going to intervene long-term on a durable basis in the long-term bond market to distort interest rates, then the only way you can do that as a government is to borrow short-term. So you issue short-term paper, which you stuff into the insurance companies and the banks who are more politically compliant, and you use that money to buy long-term bonds. Now, what that actually does is to create a distortion of the balance sheets of banks and financial institutions, which become overly exposed to short-term treasury rates. And if those short-term treasury rates ever went up, then those banks would be immediately in a cash flow deficit relative to their long-term interest rate exposure. So that course of action is the only way for investment to go on doing this, and it is extremely dangerous to start financing the US government with short-term money. It's dangerous to the financial system, and it's also extremely dangerous to the sustainability of debt, because when short-term interest rates do go up, as they eventually will, then the government will have to pay even more than the 20% of spending it is already paying to service its debts. So don't be fooled by the smoke and mirrors of secret accounts and all that stuff. That is pure fiction.
What's your expectation from Kevin Walsh's speech at Jackson Hole or later this week? Is it going to be dovish or is it going to be hawkish?
Look, he's got a problem because, to put it crudely, and this is an oversimplification, it is clear that Bessent wants interest rates down, and Walsh wants to be seen, at least, as being an inflation hawk, which would imply tighter monetary policy and higher interest rates. I doubt very much that Walsh is going to take on that hypothesis or that conflict in a speech. He is going to go for the vagaries. He's going to say, well, you know, we're looking at whether we should disclose this to markets, how much transparency we should have, whether the AI revolution should make us consider that we'll never have inflation again, and so on. So he's going to actually, I think, try and sidestep the issue of conflict with the Treasury, which is undoubtedly there and damages credibility. And he's going to go for the theoretical side of the 5 issues which he's put out to committees to be considered for a change in the way that the Fed manages monetary policy. So theoretical blah, blah, but he is not going to expose himself to a conflict with the Treasury. After all, both he and Bessent have their jobs for only one reason. Trump put them there.
All right, David, wonderful speaking to you. Thank you so much for coming in. Unique views as always.